Welcome, my fellow attorneys, to the National Bankruptcy Academy video series. I'm your host, Robert Schaller, an attorney with over 34 years of experience and registered certified public accountant. Today, we'll be discussing the statement of current monthly income that identifies debtor's income with a line-by-line analysis with real-world commentary. I hope you enjoy the video. The statement of current monthly income is officially known as Official Form 122A-1. Chapter 7 Statement of your current monthly income. This document is commonly referred to as the Statement of Current Monthly Income, or Part 1 of the means test. Every Chapter 7 debtor must file a statement of current monthly income. A better term for the statement would have been average monthly income, because this statement reveals the average monthly income from all sources of income during the 6 full months preceding the petition date. The current monthly income statement must be distinguished from the statement of current income constituting Schedule I, which reveals the actual monthly income as of the petition date. For example, consider a wage-earning doctor who had earned $10,000 per month for each of the 6 full months preceding the petition date, but was fired 7 days before filing the petition. That doctor would have current monthly income of $10,000 for the statement of current monthly income purposes, but current income of $0 for Schedule I purposes. The means test analysis consists of 2 separate statements. First, and discussed in this course, is the statement of current monthly income. The second, and discussed in another course, is the Chapter 7 means test calculation, Official Form 122A-2. Together, these documents determine whether the debtor's income and expenses create a presumption of abuse that may prevent the debtor from obtaining relief from debts under Chapter 7 of the Bankruptcy Code. Chapter 7 relief can be denied to a debtor who has primarily consumer debts if the court finds the debtor has enough income to repay creditors an amount that, under the Bankruptcy Code, would be a sufficient portion of their claims. The debtor must file a statement of current monthly income if the debtor is an individual filing for bankruptcy under Chapter 7. This form will determine the debtor's current monthly income and compare whether the debtor's income is more than the median income for households of the same size in the debtor's state. If the debtor's income is not above the median, there is no presumption of abuse, and the debtor will not have to complete the companion statement. The Chapter 7 means test calculation, or Official Form 122A-2, the statement of current monthly income, focuses on the median income of the debtor's state. So let's define median income and distinguish that from mean or average income that you might be more familiar. The median income is the income amount that divides the state population into 2 equal groups, half having an income above that amount and half having that income below that amount. It may differ from the mean income, which is commonly called the average income. The income that occurs most frequently is income mode. So again, the focus of the statement of current monthly income is the median income. The debtor's current monthly income is annualized by multiplying the monthly amount by 12. Remember, the current monthly income for this statement is defined as the average monthly income from all sources of income during the 6 full months preceding the petition date. If the debtor's annualized current monthly income exceeds the debtor's median state income, then the debtor must file the companion form, Chapter 7 means test calculation. The calculations on this form, sometimes called the means test, reduce the debtor's income by living expenses and payment of certain debts, resulting in an amount available to pay other debts. If the debtor's income after the expense deductions is still high enough, it will give rise to presumption of abuse. A presumption of abuse does not mean that the debtor actually is trying to abuse the bankruptcy system. Rather, the presumption simply means that the debtor is presumed to have enough income that the debtor should not be granted relief under Chapter 7. The debtor may overcome the presumption by showing special circumstances that reduces the debtor's income or increases the debtor's expenses. If the debtor cannot obtain relief under Chapter 7, the debtor may be eligible to continue under another bankruptcy chapter of the Bankruptcy Code and pay creditors over a period of time. Some individuals are exempt from the means test scrutiny, statement of exemptions from presumption of abuse under Section 707B2. That form determines whether the debtor may be exempted from the presumption of abuse because the debtor does not have primarily consumer debts or because the debtor has provided certain military or homeland defense services. If one of these exemptions applies, the debtor should file a supplement, Form 122A-1 SUP, and verify the supplement by completing Part 3 of Form 122A-1. If the debtor qualifies for an exemption, the debtor is not required to fill out any part of Form 122A-1 other than the checkbox on the top of page 1 and the verification on the bottom of page 2. If the exemptions do not apply, the debtor should complete all of the parts of the statement of current monthly income. A Chapter 7 debtor is exempt from the means test and does not have to file the statement of current monthly income if the debtor is a disabled veteran or actively serving in the military. Active service includes soldiers filing bankruptcy during their term of duty or filing bankruptcy within 540 days after the term of duty ends. A Chapter 7 debtor is also exempt from the means test if the debtor's debts are not primarily consumer debts. But what does the phrase consumer debts mean? The Bankruptcy Code provides a definition in Section 101(8), stating a consumer debt is a debt incurred by an individual primarily for a personal, family, or household purpose. So debts related to the family, home, car, and furniture are certainly consumer debts. However, debts related to a business are not consumer debts. Examples of business debts include a mortgage on investment property, a line of credit used for the debtor's sole proprietorship, a vehicle loan for a truck used in the business, and credit card debts for tools purchased in the business. But what does the adjective primarily mean? Primary modifies consumer debt and calls for a comparison of the total amount of all consumer debts with the total amount of all debts. The debtor's total debts are primarily consumer debt if the total amount of all consumer debts is greater than 50% of the debtor's total amount of all debts. For example, a debtor's total debts are primarily consumer debts if the total amount of all consumer debts is $50,001 and the total amount of all debts is $100,000. Now let's turn our attention to this bankruptcy form with a line-by-line analysis with real-world commentary. I hope you enjoy the video. So now let's look at Official Form 122A-1, Chapter 7 Statement of Your Current Monthly Income. You'll notice at the top left corner is the familiar fill in this information box that we've seen on other forms. So let's complete it. Debtor 1 is George Washington. Debtor 2 is Martha Washington. And we have to identify the United States Bankruptcy Court for the district in which the case was filed. And for our examples, we've been using the Eastern District of Virginia. So let's use the pull-down menu. Scroll down, and I'm looking for the Eastern District of Virginia, and there it is, and I'll check on that. Next, we have to include the case number. So let's assume that this case has already been filed and we know the case number, so we'll enter it. And over on the right side, you'll see a box, and that box says check one box only as directed in this form and in Form 122A-1 SUP. And if you remember the supplement, that was a form for the exemptions. So at this time, we don't know what the answer is yet. We have to complete out the form. So until we complete the form, we don't know whether to check box 1, box 2, or box 3. So we're going to leave that blank. We're going to complete the form, and then we're going to come back to this box and complete it at the end. Notice below the box on the right is the familiar checkbox that says check if this is an amended filing. And as you remember, if this is an amended filing, meaning we've already filed the original Chapter 7 Statement of Current Monthly Income, we would check that box. But in this case, this is not an amended filing, so I'm going to uncheck the box. This statement has the official name of Official Form 122A-1, Chapter 7 Statement of Your Current Monthly Income. So let's read the directions. Be as complete and accurate as possible. If two married people are filing together, both are equally responsible for being accurate. If more space is needed, attach a separate sheet to this form. Include the line number to which the additional information applies. On the top of any additional pages, write your name and case number if known. If you believe that you are exempt from a presumption of abuse because you do not have primarily consumer debts or because of qualifying military service, complete and file Statement of Exemption from Presumption of Abuse under Section 707(b)(2). official form 122A-1 sup with this form. Now let's scroll down to see Part 1. Part 1 is titled, Calculate Your Current Monthly Income. Line 1 asks the question, what is your marital and filing status? And you have several choices. The first box says, not married. The second box, married and your spouse is filing with you. That's the case of George and Martha Washington, so we're going to check this box. The third choice is married and your spouse is not filing with you. You and your spouse are, and they give you two choices, living in the same household and are not legally separated, or living separately or are legally separated. Those are very important boxes to fill out, so if you're not filing a joint petition, make sure you check the correct box. Next are some instructions on how to fill in the average monthly income below. And the box says, fill in the average monthly income that you received from all sources derived during the 6 full months before you file this bankruptcy case. So that would ignore any partial month. So it has to be the 6 full months. Continuing on, quote, for example, if you are filing on September 15th, the 6-month period would be March 1st through August 31st. If the amount of your monthly income varied during the 6 months, add the income from all 6 months and divide the total by 6. Fill in the result. Do not include any income amount more than once. For example, if both spouses own the same rental property, put the income from that property in one column only. If you have nothing to report for any line, write $0 in the space. Now, going below, you'll see two columns on the right. Column A, that's the debtor, and column B, that's debtor 2 or the non-filing spouse. That's the same columns that we have seen on other schedules. Line 2 directs the debtor to identify the gross wages, salary, tips, bonuses, overtime, and commissions that were earned as a 6-month average. And remember, these are gross wages before any payroll deductions. And remember the difference between gross and net. Gross is the total that was earned, where net is the amount that was received. So in column A, for debtor 1, you include the gross wages, salaries, and tips. For the debtor 2, or the non-filing spouse. In this case of George and Martha Washington, George Washington does not receive any wages, salaries, or tips because he's self-employed, so that amount would be 0. But for Martha Washington, she does receive income. She's a school teacher, and she receives $6,000 a month. Line 3 requires the debtor to identify any alimony and maintenance payments that are received. And it says, do not include payments from a spouse if column B is filled in. That would be one spouse paying another spouse. For example, they were separated. But because George and Martha Washington lived together and filing jointly, then they would not include any of that. George Washington does not receive any alimony and maintenance payments, so that would be 0. But Martha Washington does. She receives $500 each month from a prior marriage. So let's scroll down to see line 4. Line 4 directs the debtors to identify all amounts from any source which are regularly paid for household expenses of you or your dependents, including child support. With further directions, include regular contributions from an unmarried partner, members of your household, your dependents, parents, and roommates. Include regular contributions from a spouse only if column B is not filled in. Do not include payments you listed on line 3. So that would be an example if you had an adult child who's living with the debtor and the adult child pays rent for $400 or $500 a month. But in the case of George and Martha Washington, they have 2 children, 11 and 14 years old, and neither one of them contributes to the household expenses. So these amounts would be 0. 0 for George and 0 for Martha. Line 5 requires the debtor to identify net income from operating a business, profession, or farm. In this case, George Washington does have a business, and the 6-month average for the gross receipts, remember gross versus net, for the gross receipts is $8,000 a month. And for debtor 2 would be 0 because Martha Washington is not self-employed. Now, ordinary expenses for operating the business for George Washington for the 6-month average would be $5,500. And of course, for Martha, it would be zero because she does not have a business. And the net monthly income from a business, profession, or farm for George Washington is the difference between the $8,000 income and the $5,500 expenses, which is $2,500.